All right, well, let's go ahead and get started. We're going to roll right into this. We had 46 of these daily action calls back when COVID first hit in the spring. We took a hiatus knowing that we would come back to them when we needed the opportunity to talk about things related to COVID. And we certainly have something to talk about today in terms of some stimulus funds, some relief funds coming from the federal government in kind of a second wave here. And we'll get to that here in just a moment. We've assembled an all-star cast to help us talk about that. And so the Greensboro Chamber is really, really pleased to be able to present this to our membership and to the business community, and also to have Downtown Greensboro Inc. to be joining us as co-host as well. So Zach, I'll turn it over to you and let you say a welcome on behalf of DGI as well.
Thanks, Brett, and good to virtually see everyone. I can't wait for the day that we can all have a conversation in person and high five and smile and maybe even hug each other. With information coming daily, if not hourly, if not by the minute, it's important for us to stay in touch. And so I appreciate the Chamber allowing us to be a part. And as we've joined the Chamber and PTP in this hashtag triad together, together we'll all get through this, and staying informed with each other is important. And just good to see everybody, and let's let these folks tell us what we need to know.
Absolutely. Thank you. So like I said, we have assembled an all-star cast today, for folks who really know this backwards and forwards. I don't know that there's any question that you can throw past them that they don't know the answer to. So let me introduce four gentlemen. Scott Baker, who is the Triad Market President for Town Bank. Nathan Duggins, who's the managing partner for Tuggle Duggins Law Firm located here in downtown Greensboro. Wilson Lester, who's the executive director of Piedmont Business Capital, which is located at the Nussbaum Center for Entrepreneurship here in Greensboro. And then Jimmy Eggers, who's a tax partner with Smith Leonard Accountants and Consultants all the way over there in High Point. So speaking of Triad Together, here we are, Triad Together. And obviously, again, with what happened over December, and this legislation getting signed into law late December, I believe December 30th. Here we are in kind of mid-January, still putting all the pieces together and getting ready for our small businesses to avail themselves of this stimulus and of these relief funds. And so I've got a few questions to ask, but certainly we want the audience to ask questions as well. We would ask you to do that in the chat function so that we can make sure that we get to everybody's questions as we go along. So Scott, I'm going to open with you and just talk about if you've taken advantage of the first rollout of relief funds, whether that be an EIDL loan or PPP. What does this new round of stimulus do for you? What should you be paying attention to if you've done this once already?
Okay, there are several things that did come out about this extended act. And so one, I'll start with those who applied for PPP, got their PPP. If you got an EIDL as well, often your PPP was either your forgiveness was reduced by that EIDL, which is that economic injury disaster loan. And it's come out that those payments will be reallocated to you because they are now granting forgiveness for both the EIDL portion and the full PPP. So those will come directly from the SBA. Borrower doesn't need to do anything, but those payments will also be coming in addition to the PPP forgiveness. Secondly, if you applied for the PPP and you returned it, or you returned portions of the PPP, you are allowed to now go back and reapply for those funds and have those reallocated back out to you. So there is access to those people. There were a window of time, as individuals may recall, where there were many that were uncertain about the qualifications, how things were potentially turning money back in, realized potentially after that they could have access. You are allowed to go back and regain access to those funds under that original. So that is an option. And then third, There are some that may not have, because some of the rules, as many know, when the rules were released, it was rather unclear how certain K-1s or partnership and other income was to be handled. And so a lot of times partnerships did not include their partner income and only include the payroll income directly. Well, some of that has been clarified, and those individuals are allowed to go back and apply for an increase to their existing PPP to account for funds that they could have qualified for that maybe they didn't in the initial request. So there are several factors around that. And then the last point, Jimmy will probably talk to a little bit as well, but there was a lot of dialogue. The IRS had come out and stated that the expenses would not be allowed to be expensed on a tax return, and it required an act of Congress in order to correct that. Well, this bill accomplished that, so therefore now that is a correction too. So those who got it, those expenses can be deducted on your tax return now that were utilized for the PPP. So I'll kind of stop there and we can go forward.
Back to my 2020 version where I forget that I'm on mute. I promised myself in 2021 I wouldn't do that. So what I'm hearing is there could be a number of businesses out there that got PPP and may have kind of or washed their hands of it. Okay, I'm done. That need to be thinking about there's probably some additional funding that you qualified for that you need to go back and take a look at, right? And probably need to be calling their banker, their attorney, their accountant and saying, hey, I probably am due a little bit more from that, right?
Potentially. I mean, again, I think many of them, as you got into it, the banks were using the payroll data and whatnot in order to submit. But for those that were in that criteria we talked about, maybe didn't apply for the most that they could because of the partnership structure or lack of understanding, or again, those that may have returned funds, they certainly need to be having that conversation.
Yeah.
And I would say those borrowers that may go back and look at the data they submitted, if they feel like there is a question, certainly reach out to your banker that handle processing, see if there is room for an adjustment there, because there is an opening for that and some funds allocated for that purpose.
Okay, great. Thank you, Scott.
Yep.
Nathan, I'm going to turn to you in terms of what's new in this legislation for maybe first time PPP applicants and others. I mean, I know that there's a special consideration in there for one particular industry,
right,
as well, that we want to bring to everyone's attention. So I'll turn it over to you for some of that.
Yeah, so a couple things. Obviously, and if you're a restaurant, hotel, it's the NASCI code 72, which was an industry that probably should have been protected more in phase one, and is I appreciate that Congress is going to make that type of business, or the types of business that fall in that code, eligible for 3.5 months of payroll expense in PPP2 as compared to 2.5. So that's a big change, and hopefully will help a lot of the folks that fit in that code section survive what may be another 4, 5, 6 months of lockdown here. Hopefully not that long, but maybe a little bit longer. So that's some good news. Of course, and I can't remember if Baker, I was listening, Scott, but I can't remember if you said that second time applicants have to have demonstrated a decline of 25% of quarter over quarter or year over year decline in revenue. So that's a change this year, and they've also lowered the threshold for the number of employees. It was 500 in the first round. It's 300 in the second round. So those are a few things. A lot of things are the same. The terms are the same. It's a five-year note, 1% interest, 24-week covered period to spend the funds. So there's a lot of things that are the same. This is just kind of a funny thing. I went back and I looked at the old application from April of last year and compared it to the new application. And Congress is like anything, they learn from their mistakes. And there's a lot more representations you have to make on the new application, including that that the applicant is not owned by the president, the vice president, a member of Congress, or a spouse, which I thought was interesting. And then there's a Chinese exception too, that the People's Republic of China doesn't have some ownership interest in the applicant. So those are a few of the things that are new. Much of it is the same. One thing that I think the group might benefit from knowing too is, this question of what is gross receipts is going to come up. And that's something certainly your accountant or your bookkeeper can help you with. But, if you collect tax that is immediately remitted to a taxing authority, that's not included in gross receipts. So, when you're trying to compare the quarters or trying to compare your annual receipts, there's some pretty good guidance, and it's actually in the application. It's on page 4 of the application that just came out last week. So I hope we talked this morning, the group that's speaking to the group this afternoon talked this morning, and I hope that it'll be a little smoother this time. There'll be more questions answered. Scott and Jimmy and everybody on this call probably remembers the application last time. I think it changed a half a dozen times before they started taking applications, and then it even changed after they started taking applications. So I think this will be a little more stable and a little more predictive in terms of how this is going to roll out.
Thank you, Nathan. I think one of the other things that is changing with this are access points, and I'll turn it over to Wilson to talk about that, because I think they've made a couple of alterations to make sure that some of the businesses that folks felt got left behind in the last round get first bite at the apple. So Wilson, I'll let you talk a little bit about how folks can access these funds at this point.
Great. Thank you, Brent, for that. So first, I'm glad that I was on the call, because since the first of the week, Piedmont Business Capital has received several dozen calls of interest for new applicants. And I want to let the community know that our CDFI is not servicing PPP this round, but we can point you in the direction of partners that can support you in that activity. So in a moment, I'll put in the chat, but after talking to the small business administrator, the interim director of small business administration for the state of North Carolina earlier today, he did provide a link for Lender Match. SBA has a Lender Match portal that you can go in and put the name of your business, your location, and based on that information, they will match you with the most appropriate and available PPP lender that is taking applications currently and early. So that's ideal if you're looking for access to that capital immediately to access that portal. And I was going to mention Bob Weston and his team at the SBTDC were a silent hero in our community in 2020, really providing the lion's share of technical assistance to individuals that were trying to navigate their way through the application process, and maybe were a little bit underconnected to either technology or resources and partners available to do that. So I strongly encourage you to reach out and schedule an appointment with the SBTDC, which is headquartered right here in Greensboro, and serving the broader Triad market. Additionally, speaking of things that were kind of looked over, as Mr. Duggins just explained early on in 2020, there are a couple of programs that are being released tomorrow, and I've shared that information with the chamber, and I'm sure they'll disseminate it to those that are registered on the call. There is a session tomorrow. SBA is hosting a shuttered venue operators grant program for folks that are operating live performance venues and or different event spaces in our community to get some early access to some grant capital that they so desperately need, as they have not been able to operate as scheduled in the past 10, 11 months here. Additionally, the last thing that I'll note is there is a real effort at making sure that sole proprietors have access to this capital early, up to $20,883, I believe is the exact amount that those businesses will be able to access in PPP2 as a forgivable loan. So we want to make sure that that information is out there as well. And all of this guidance that we're providing has been provided to the chamber ahead of time again, and it will be disseminated to those that are registered on the call, and I'm sure posted on the chamber website and on the DGI website most likely. So early on, Piedmont Business Capital is available to help connect folks to the right parties that can help people apply, whether that be SBTDC or other technical assistance partners in the market.
Great. Thank you, Wilson. I appreciate it very much. I'm going to go back because one of the things we talked about this morning, maybe I'll turn it over to Scott to talk about this. I know there's some SBA debt relief involved in this process as well, that people may just flat out not know about. And so you may want to spend a few minutes on what that is as well, Scott.
Yeah, glad to. And just a comment, Nathan was mentioning too about the round 2 of the PPP, which we really didn't cover, when we first spoken. And there are some key criteria: the revenue reduction, the 300 employees, it's limited to 2 million, no greater than. But one other factor is you have to demonstrate that you have used all of your PPP1 funding before you can get access to PPP2 funds. And so the best way to demonstrate that is likely to have applied for PPP1 forgiveness and to have that forgiveness application. So I just want to make sure there's one more item on that as you're thinking about potentially applying for PPP2. As for the SBA debt relief, one of the other not commonly known factors, but for those of you who have access or have a SBA loan, could be a 504, 7A, micro loan, those individuals or businesses were granted 6 months debt relief in 2020, and that was by the SBA. That has been extended as well into this program, so those who obtain the debt relief have the opportunity, they will get an additional 3 months of debt relief provided for those SBA loans in 2021. Additionally, those in that NAICS code 72 hospitality and restaurant will also have potential to get an additional 5 months on top of the 3. So they could qualify for potentially 8 months of additional SBA debt relief for loans that they may have under those 504, 7A, or microloan programs. So it's a great access point for those that are carrying the SBA notes.
Great. Thank you, Scott. I appreciate it.
Yep.
Jimmy, I'm going to turn it over to you. Tax implications. What are you telling your clients about this second round and what they need to be aware of and be thinking about?
Well, going back to what it was, somebody mentioned it earlier, the big thing in question was whether these expenses would be deductible. And not to get too technical, but originally in the CARES Act, they had expressly stated that to the extent the PPP loans were forgiven, you wouldn't have to pick that up as taxable income. But as it is, the Internal Revenue Code's a little bit different, and there were a couple catch provisions in the code already that basically said you can't deduct expenses that give rise to tax-exempt income. And so that was what was snatching it up until December 30th when they passed this bill and plugged the fix, so to speak. The problem we had from my standpoint was it's kind of hard to do much year-end planning when you get a provision like this on December the 30th, right? Fortunately for us, we had been kicking the can down the road the whole time, not making people pay estimated taxes under the assumption that it was going to, in a sense, not be deductible. So we got lucky by the skin of our teeth. So if you go to PPP number 2, this same provision applies for PPP number 2. So the loan forgiveness is for tax purposes is not taxable, but the expenses that allow you to burn through and grant forgiveness by the banks and the SBA are in fact deductible. So that's kind of it from the tax standpoint. There are some other minutia, but I don't think I really want to get into S corps and partnerships. I don't think that's the type of audience we have, but there is some other, I call it, you have your cake, you eat it twice, not just eat it two, right? So there are some other benefits. If you run an S corp and a partnership, you actually get basis step up in your S corp and partnership for the forgiveness piece, which is kind of sweet, right? So that's kind of it from the tax standpoint there.
Gotcha. So I'll throw this one out there. Wilson, I heard you say that people have been calling you. Are your phones ringing, Scott, saying, okay, we're ready to go on this? And I know right now you're not able to access the funds, but there are some out there who are able to access the funds. You want to talk a little bit about timeline and application and that sort of thing? I'm going to throw that to Scott. You're on mute. Sorry.
Got it. You got me now? All right.
Gotcha.
So, yes. So there are some very good reasons why the SBA has limited the initial access. And that is, we talked about earlier, a lot of the very small businesses struggle to get some of the paperwork together in the initial phases. And so there's earmarks initially to try to reach out to that section and make sure that they are getting access early on. So they have focused on minority-owned banks, CDFIs, other access points of a small nature to make sure that those individuals have access. And that's what opened up on January 11th. It was for those who did not get an initial PPP. As of today, those same access points are now able to reissue second PPPs to their borrowers. There are also several allocations of funds that are set aside. So for example, $35 billion set aside for first-time borrowers for all in low-income areas for loans of $250,000 or less in order to make sure that they are addressing certain segments that may not have had the early access. So there's a lot of elements like that. I would expect banks, traditional banks, to start having access possibly as early as next week into the PPP portal. The one other item that I will make sure I share is the SBA has come out and vocalized that they believe they have earmarked sufficient funds for the expected demand. So we talked about this earlier. Our recommendation is be diligent, but don't be panicked. Make sure you're reaching out with your banker, your partners, get the advice, complete it. But the SBA believes they have sufficient funds, and even though it's a first come, first serve, they should be able to meet all the expected demand.
So yeah, there are a lot of people still scarred by that first round when the government essentially ran out of money, and some folks were shut out. Thankfully, I think they fixed that. But I think your advice is, be intentional, be moving towards this, but don't panic, right? So we especially want all of Greensboro to get in line as quick as possible. But it's not a panic situation. But knowing that, any town USA has businesses that are going to be applying for these funds, and so we would love to make sure that we're at the front of the line or as close to the front of the line as we possibly can for those funds for our Greensboro businesses. Is there a maximum amount, Scott, that somebody can get in a PPP?
In the PPP2, the maximum amount is now $2 million. It was previously $10 million.
Okay.
Yep. And on a side note, Deborah, I see your question on the SBA loan forgiveness. Are you talking about the SBA debt relief for those that SBA notes for 504, 7A, the micro loans that we talked about?
I think that's what she's talking about, Scott. I think.
Yes.
Okay, there is a limit. It is up to $9,000 per payment, so monthly payment. So if you're getting 3 months of a $9,000 payment, it'd be $27,000 But it depends on what your payment is, either maximum payment amount or 9,000, whichever's less.
Nathan, there's another good question on here that says, can nonprofits apply? I believe certain nonprofits could apply for the first round. Certain other nonprofits like 501c6s, like the Greensboro Chamber of Commerce and Downtown Greensboro Inc. and others could not. But I think that that nonprofit application eligibility has been
Yes.
extended or opened up, widened.
Yes, I mean, I think that was a miss, obviously, in round one, and they have corrected that in round two. I mean, all the same rules apply, right? And there's actually some pretty good guidance about what a nonprofit's revenue is, you know, how you measure that, and payroll costs and that kind of thing. But yes, they fixed that, and I think I'm hopeful that a lot of people will take advantage of it, because we obviously need our nonprofits to be able to survive this as well, and our chambers and other organizations that were excluded previously.
Our downtown Greensboros, we need our downtown Greensboros.
Yes, absolutely.
So we need them to be applying and working on this as well. And I think that there's just one provision in there, and you know, being a nonprofit, I've kind of looked at a little bit, and there's some limit to the amount of money you can spend on lobbying to be able to be eligible for that. I think it's 15%. Is that right, Nathan? 15%?
Yeah, I think it was we said 15% this morning. I thought it was 20, but it's a small amount. So if you're approaching either of those numbers, you're definitely going to want to check and make sure. I mean, it's kind of similar to what I was saying a few minutes ago. They've tried to cater this a little bit better than they did initially, right? In terms of making sure that people aren't taking advantage of the program in spaces they don't want the money to be flowing, like lobbying groups and other groups. But if you're at 12% or 16%, check with one of us. And I'm sure I speak for Jimmy and Wilson and Scott and Brent that, call all of us, send us an email. We're open to answer any questions we can answer for anybody that's on the call, because we really want to make sure, like Brent said, this is important for Greensboro and Guilford County and the Triad, that we get our, I'm going to borrow Baker's silly analogy, get our straw in the Coke here, so we can make sure we're going to draw on this thing, because it's just how you keep jobs and businesses alive.
That's right. That's right. I'll go around and see if there's anything we need to clean up, anything we forgot to talk about, as I also implore our audience to ask any questions that they might have. Scott, any things that we need to be thinking about that we haven't thought about yet?
Not that I'm looking through our list here that we came up this morning. I don't think so. I think we've covered most of it. There were some expanded expense uses in the PPP. I will tell you that I don't think they're material. I mean, they've expanded some uses. It includes if your store was damaged, repair costs for some of the damage that may have occurred over the summer. It has some other expense items for software and accounting, but again, I don't see those as being the big material items. The real ones are still core payroll, rent, utility, those type functions.
But didn't you also say this morning that there's some additional payroll costs that you can put on there as well if necessary?
Yeah, they've included dental and vision, Jimmy, wasn't that right?
Yeah, that's right. Long-term disability, and they've also include group life insurance coverage too.
Gotcha.
Yeah.
And this wouldn't apply to a lot of businesses, but PPE expenditure, where you've spent money on plexiglass, or I think you'd see that more in the restaurant space and some other client facing space. But that was another purpose that you can use the money for.
Also for accounting, people like me, to help you with the PPP work. right?
Wow. Okay. So
Software cost, accounting cost, like Nathan said, the PPE, excess cleaning costs, stuff like that. Supplier cost in some cases, some of that. I wanted to throw something out there because I've just been kind of messing around online. Scott, I'm reading where if you apply for round 2, you go through the same bank, you're less than 150 grand with your app, that you may not need the PPP payroll documentation, and nor do you need to demonstrate a 25% decline in revenue up front. Are you hearing any of that? Is that true? Because that may urge people to stick with the bank, even though it was kind of a mess the first go round if they had a bad experience, because then they may not have to drum up all the documents. For instance, if they use 2019 payroll for their first draw, then maybe they don't have to try to get all that crap together because the bank's already got it loaded, right? I'm just throwing that out because I just read it and I was wondering what your experience is. And I want to create some back and forth because we still got a lot of time left, right?
Yeah, no, I like it. So I will say 2 things. One, I do think it's probably best to work with the bank that you accessed with, unless they are just not able to execute, then look beyond. But I think your first and foremost is that. I had read some hints of that. I don't know that I want to speak to it. However, I would advise everyone, just because you may not have to have that at hand when you're applying, that everyone could still have information pulled by the SBA or IRS go forward. All the disclosures allow them to go back. So you still want to have your documentation. You still have to maintain it for 6 years, 7 years. So even if you don't need it right on the front with the bank, the ease of getting the money may be better, but you still need to make sure you have the right documentation to support your loan request, because they could come back and ask for that. And I'll tell you, as a bank, I am seeing, we've got some requests that were for as little as 30,000, some for much higher, and I have seen even the smallest one get an audit pull from the SBA. I'm answering some SBA audit questions on very small requests still, and I'm a little surprised by that because it was earmarked that they wouldn't, most likely go audit the ones that were 2 million and under, but they are still doing some spot checking and asking for additional documentation from the lenders on the request. So I think
Scott, let me counter that a little bit. You saw the SBA came out today, and or not counter it, but the SBA came out today and actually gave some statistics about the amount, the percentages that they're forgiving, and they're high. And so, I know the SBA has already forgiven and issued a lot of forgiveness letters for PPP 1 or the original PPP, and I suspect the reason the SBA is doing that is probably to give people comfort that Baker, you can remember in April or late March, you and I were having conversations saying there's no way this is real. The government's never going to forgive this money, right?
Yeah.
And so I wonder if the SBA is releasing information about forgiveness to try to combat what is a very legitimate skepticism about this program. I'm
good. I'll answer real quick. Just from our perspective, our borrowers are getting forgiveness, and it's great. My only statement was just making sure you have your documentation, even if not required to submit, because you could get asked for that at a later point.
Absolutely.
But yes, I think we've been very pleased with how the process has gone. Sometimes it takes a little bit of time, but it has still moved pretty well.
Good time filler, Jimmy.
Gentlemen, we've got a question that says, can we confirm that businesses can apply for PPP and also the employee retention tax credit this time?
Ooh,
Are those still on the table?
Yes, so here's the deal. You can do both, but you can't double up, right? So I have a client, for instance, that sent me some information yesterday. They weren't forced into closure, but their suppliers were during the period of time, which coincidentally allows them or enables them to go back and reach back and get those employee retention tax credits. However, they had gotten, call it $600,000 in PPP money. But what they were going to do is they were going to go churn the numbers to see which one was more lucrative for them, right? So if the ERC ended up being $1 million, because they had pretty big payroll, then they were just going to say, screw it, get the money there and then pay back the PPP loan. You see what I'm saying?
Yep.
But you absolutely can now. And they're fairly liberal with some of those rules at an impact, because the standard is 50% loss of revenue or impacted by the COVID, meaning that you had a forced closure by a governmental entity, or it gets liberal in the sense that some of your suppliers may have been forced to be closed and they weren't essential businesses during that period in time. So if you've got even the glimmer of hope, I would look into it. And if anybody needs it separately, I've got a good article from the IRS website that I could flip to everybody.
That'd be great. So that's a good way. Some of these businesses are going to be looking at these different programs and determining which one's best for them still at this point.
No doubt.
Yep. Very good. Last questions. Going once. Going twice. All right. Wilson and Jimmy and Scott and Nathan, as usual, you've done an incredible job getting us up to speed. We may call you together again. As we said, we've gone from daily action calls to as needed action calls. So as this continues and more folks get in the portal, we may need to come back and tell people what you're experiencing. So I hope you'll be I know you'll be willing to do that, and we appreciate that very much. So thanks for your valuable time. Zach, I'm going to turn it over to you. Do you have any final comments from the downtown Greensboro perspective?
Well, I think that the key thing is there's a lot of moving parts in this. I think, I've said this for my professional life. When in doubt, ask a professional. And you heard from the professionals today. Whether these folks are your professionals or you have others, there's folks out there that can help guide you through this process. The last thing I would say is Downtown Greensboro Incorporated launched this week a hashtag DGSO to go. And these businesses that are out there, whether they're small mom and pop retail shops or restaurants or large manufacturing businesses, everybody needs help. And I'm going to reiterate the hashtag try it together and just encourage everybody to look at hashtag DGSO to go. Our website is downtowngreensboro.org. We are giving for every $25 you spend at a business, you put in your receipt. So if I spend $100 tonight at Beer Christopher's, that's 4 entries. We're raffling off $1,000 a week for the next 12 weeks. $500 goes to the person, $500 goes to the business.
Awesome.
We're doing everything we can to support them. Government's not going to bail us out of everything. We've got to keep supporting these businesses. And so let's continue to work through this, but also continue to support local.
Thank you, Zach. Great message. We appreciate it. Thanks for everything that you're doing for downtown Greensboro, for the Triad, for our community. We appreciate it very much. Yes. I would add one last thing before we go. Our annual meeting is coming up. It'll be at lunchtime on January the 27th. We hope, knock on wood, this is the last time we have to do one of these large events virtually. We like you, Zach, we want to shake hands and hug and high five and do all those sort of things. So we'll do one more, hopefully just one more virtual event, January 27th at lunchtime. We'd love for you all to attend, buy your tickets on our website, or you can give us a call and buy just by giving us a ring, and we'll take care of you there as well. We'd love to see everybody's face there as well. So again, thanks to our panel today. We appreciate all of y'all's time, and we will be sending out a follow-up email tomorrow to our membership, and we'll make sure that we get all of this up on our website and make sure everybody has all of that information as well. Holly's got a really good point here. If you want to save the chat, Holly, I know there's a way to do that, but I'm not exactly sure. Maybe, thank you for bailing me out here.
No, you're good. If you go to where your chat box is, right beside file, there's 3 little dots. Click that, and the first option is save chat, and that'll save it wherever your Zoom calls get saved on your computer.
Great. So you can save the chat, and you've got all this, but again, we'll follow up with emails and have it on our website as well. So thanks everyone. Looking forward to seeing everybody as soon as we possibly can. Don't forget to spend your money locally, and DGSO to go. Is that right, Zach? Did I get that right?
Yes, sir.
DGSO to go, hashtag your entries.
You've been saying it.
What's that?
I said, I want you to say it so much you're saying it when you're sleeping.
Right, exactly. All right, everybody, have a wonderful rest of your Wednesday, and we'll see everybody again hopefully on January 27th. Thank you.
See you.